Hi there, it's Bill with Smart Trades. It's Tuesday, June 28th, around 11:50 a.m. and let's jump right into it here. Here's the S&P cash daily chart. To my way of thinking, there's still a couple of options out there for the S&P. I'm beginning to favor that we are going to go up and wave D of the triangle and perhaps test the 1340, 1350 area in the coming weeks. However, it's certainly still possible that this decline is an expanded flat, and that we have the March drop as A, the rally into April as B, and that we're still working on C, which would have 5 waves down if we faltered below about 1315 or so. Ideally, probably more towards the 1300 area, basis the S&P cash. That would give us a possible ABC up and a 5th wave down into that 1240, 1250 area, and that's also coinciding with the long-term trend line, which I've mentioned in past reports. At this point, I'm not certain which is the case. I think we need more evidence, but I'm beginning to favor, because the NASDAQ is relatively strong, that we are in wave D rather than in wave C. But I'll keep an open mind, and particularly again as we get into that upper 1290 area, I should say the upper 1290s, around 1300. If we were to fail there and get some breadth divergences, I would actually consider shorting the market for one more test of that 1240, 1250 area. On the other hand, if it blasts through 1300, particularly if it gets through 1315, then 1340, 1350 is a likely scenario. It's possible also that this is a completed flat. The NASDAQ has taken out the bottom of A, which is typical of a C wave in a flat, so it's not an absolute given that we're going to go up here and fail at 1340, 1350. But anyway, one step at a time as always. Let's watch it at 1300 first, see what happens, and but for now I think the market is still has a little bit of a bullish bias and has somewhat higher to go. Here's the short-term pattern. You can see here we've busted through this little parallel channel, and again here's that 1298, 1300 resistance area. I think that's going to give the market some trouble. Whether or not that's going to actually reverse it back down to new lows or not remains to be seen. Somewhat dated charts as usual, and if you want more recent updates and more frequent updates, visit smarttrades.com. Breadth again pointing up still as we speak. This is a chart I actually posted back on the 24th. This is of Apple and a possible Elliott wave count. You can see the 5-wave structure of 1, an ABC of 2, and then a possible another 1, 2 down. There's another alternate count where you could count this as a previous 4th wave, which would have targeted about 318 on this decline. However, the shorter term support, which I had mentioned in my newsletter, is around 325. Now the market actually got to, I believe, 325.09, and what I had mentioned in my newsletter is that if Apple had held that higher target and managed to rally, that would likely lead the broader market higher as well. Well, again, 325.09 was the actual low on the 325 target, and from there we gapped up and took off, at least on the short term. That said, Apple is now bumping up against this trend line, the old triangle trend line. I've discounted the triangle pattern. Nonetheless, that trend line probably is going to offer some resistance to the market, coming in the high 330s, around 340 over the next several days. And whether or not that's going to lead us to a new low in the broader market or just a small corrective decline remains to be seen. But it's worth noting that Apple is probably going to find some resistance here in the next 5 points or so overhead towards about 340. Crude oil. This is a dated chart. I actually posted this back on June 22nd for my clients, and what's interesting is this is before the government intervention there to release the strategic oil reserves, and I had called for a drop to 90. This is the actual chart that I posted. You can see how it turned out. We dropped to, I believe, 89.70. From there, we've kind of gone sideways to slightly higher. We're actually up to about 92.75 as I speak. And this market's got to get through about 96 or so if indeed this count is correct. If it is correct, you know, basically the entire count from the highs up around 117 can now be counted as corrective. What I'm not showing here is a longer term chart. We've actually gotten to the bottom of the weekly channel in crude, so the potential for a bit of a rally here is pretty significant if we can hold this 90 level. Again, the actual lows are a little below there, around 89.70 or so, and my projection was that we would hit there and bounce rather sharply. At the time that I originally posted this chart, again, I had no knowledge of the release of the oil reserves, so that may put a damper on this count. Nonetheless, it is rather interesting how oftentimes the technicals work out in spite of you know, huge fundamental issues like that release. Dollar index. I believe I've posted this chart before. I've definitely posted it for my clients, and this is basically showing an ABC decline with a wedge-shaped C. And of note here is that we're basically still stuck inside this wedge. Now, that means we could actually go back down, test the low. We could break out. I really don't know, but I think it is interesting to note that more than likely this decline from the 2009 peak does look corrective, and probably we've got another rally to go, probably up over 90, perhaps as high as about 93 or so in the coming months. And here's the euro. I had noted this chart that we had a possible, what I call a B-wave breakout around 144.56. We have not yet broken through there. As I speak, we're at about 143.30 basis the euro FX. And the thing that I'm looking at on these charts, that I was originally looking for a peak up here, up above 146. That said, since then, the declines have carved out ABC patterns, both this larger one down to the low in mid-month, and we've got another one in the last few days. And so what I'm beginning to wonder here is if this is not a bull flag, a flat, or even a triangle, and that eventually we're going to have one more new high to come. Because again, the structure of these declines so far is corrective, and that's kind of a red flag to my original bearish count. The good news is that you know, we've got some room to spare from where we originally were looking for that peak, up around 146.50. So let's watch it. A breakout above that 144.50 area is probably a signal that not necessarily that we're going to make a new high immediately, but that this entire pattern is indeed a corrective decline, and that eventually we're going to make new highs. Bonds, I've been looking for a peak around 126. We've gone somewhat higher than there, but we've failed to follow through. You can see this trend line, which is just a parallel to the lows. And again, we've jostled above 126, but failed to follow through with any magnitude. I think there's a pretty good chance the bonds have peaked. That we need to see more price action to confirm that. But this is definitely an area where the bonds are getting a bit toppy. Now, gold has taken its sweet time topping in what possibly is a wave 2 peak, or this could also be an ABC pattern, A down, B up, and this could be C. Nonetheless, that 1550 area, which I had noted for some time, did hold after all, and so there's a possibility that we have an intermediate term top in gold. Certainly not a perfect count. Again, the amount of time it took to finally roll over from 155.50 makes me wonder if that's a wave 2, but it certainly doesn't break any Elliott wave rules, and you have a lower peak at this point. You need to break down below wave 1 so that you get a little further confirmation. But again, even that does not completely negate the possibility that this entire decline is in ABC. Nonetheless, lower prices are probable, at least in the short term, in gold. Anyway, that's it for now. If you'd like more detailed and more frequent reports, please visit smarttrades.com. Hope you're having a good day and good luck in the week ahead. Thanks so much for watching. Bye-bye.